Hi, and welcome to the 2021 Economic Depression and Preparation channel. I'm your host, Tony. Thank you for joining me once again on this Valentine's Day weekend edition. Hope you and your loved ones are enjoying some relaxing R&R time together. And today we're going to get right into it. Please make sure you hit that subscribe button. Some people have not been getting the notifications. So make sure you hit that subscribe button to get the latest videos and notifications from the Preach to Me arena. So today we're going to be talking about two things here at a glance. We're going to be talking about the jobless numbers and how that's going to affect the economy in the future. And also I'm going to give you some of the data of the numbers and also our trade deficit with China and how that's going to impact our bringing us to a lower standard of living in the short term as we continue to go into the second and third innings of this Great Depression that people are now starting to realize that we're going to be in this for the long haul, meaning something like 10 to 15 years, maybe even 20 years, according to some economists. Even people on TV have been saying this. So let's get right into it. First, I want to start with the economy at a glance. This is from the Bureau of Economic Association, the BEA.gov. This is straight from their coffers. As you can see, the gross domestic product, the GDP, has only increased 4% in the fourth quarter of 2020. But if you look back even further, back from 2017, it was growing at less than 3%, basically flatline here since the current thing. And then, of course, that second quarter, we had a negative 31% GDP drop right here. I'll blow it up for you. You can see that big drop because of, coronavirus and the alleged drop there. But then we had this big increase in production in third quarter, and most of that was based on the first stimulus check, the CARES Act, the PPP loans for the businesses, keeping everything, the fake injections from the Federal Reserve Bank. That brought us up. But look how it dropped quickly back in the fourth quarter. GDP dropped down to 4% in quarter four, and this first quarter is even lower. GDP in this quarter is only down to like 1 or 2%. So it basically stagnated. But look how we were stagnated back ever since 2017. And really, we would all argue, since 2008, we've been stagnated in terms of growth. So that's just something I wanted to show you here. And also, look at the personal income delays here. We have, let's see, one second. We have did the month-to-month change in personal income. Look at this, -3, -2, down. In December, it's barely up 0.6% increase. And that's only because of the CARES Act and the stimulus, but it is going down. And things are getting more expensive here. And I want to show you the inflation at trading economic indicators here. You can see the GDP growth is down, -2.5. But look at the balance of trade deficit, negative 666 million, negative 178 million. That's our current account balance. Negative 2.3% GDP, current account to GDP, and our debt to GDP ratio was over 100. It's at 108. That is very dangerous. And the government budget is at negative 4.6% deficit. Okay, so you take all of that. Plus, you take up here, you look at the dollar is falling. The dollar is at $90.44. It's been dropping the last 6 months. This is not a good sign for this economy. But the stock market is at all-time high, 31,000, over 31,000 right here, as you can see. But look at this here. President Biden warns China could eat our lunch as he calls for improving U.S. roads and bridges. So, as you know, Biden and Vice President Kamala Harris are talking about this infrastructure plan. So the stock market and Wall Street and everybody, they're anticipating not only a stimulus, $1.9 trillion stimulus bill, but also an infrastructure bill passed that's going to be another $2 or $3 trillion on addition to that. So this is going to not only increase our debt with China, but this is going to make the United States at a lower standard of living, because it's going to take at least 10 years for manufacturing to come back from all these businesses who shipped our jobs overseas, if they even want to bring it back here. And then secondly, infrastructure is going to take a long time to improve. Right now, they say more than 54,000 bridges across the U.S. are rated structurally deficient. Ports, waterways are also in disrepair. Well, we have other problems to worry about in terms of the bridges and the roads. What they're going to do is they're going to take the abandoned malls in the abandoned office buildings and turn those into low-income housing and housing for the homeless shelter, so they'll be able to get some money out of some rent out of this. Because remember, the commercial real estate market is crashing as we speak, and this is going to go into summertime. And then the housing crash, we can anticipate that to happen around September or October of this year. Is going to begin to crash, and then next year is really going to fall out because we won't be getting any more stimulus checks, direct to consumer stimulus checks anyway. And so all of this additional spending is going to create massive unemployment. It's going to create massive crime, and these cities are going to be really in trouble because look at this here. Jobless claims worse than expected as pandemic-related filings surge. Now, this is in CNBC.com, but you have to realize that the media paints a better picture than what's expected. But look, we've had 793,000 jobs last week. That's higher than the estimate of 760,000. So we have 40 million people unemployed. You can see the initial jobless claims continue to rise here in this country. And it's only going to mean that we're going to continue to see people homeless, jobless, and looking for more handouts. And the Federal Reserve knows this, that once they've started the stimulus check downfall, they're going to have to continue printing until the dollar is worth nothing. And so continue to get yourself out of dollars. Continue to buy other assets like gold, silver, cryptos. Even get into survival, sustainability, because that's where it's going to be at for the rest of America. You see, look, the deficit is projected to be $2.3 trillion for 2021, not counting additional stimulus. This Center Congressional Budget Office said. So that means that we're going to have the largest debt to GDP ratio in history. And we know what happens when that happens. The Great Depression comes. And I know that inflation is going up in food and gas and things of those natures. But this is going to be ultimately a deflationary spiral. Because what's going to happen is we're going to have a bunch of worthless dollars chasing few goods, and that's going to spell deflation because people are not going to be spending. They're only going to be spending on essential goods for their household and their family, and they're not going to be buying these cars or any luxury or traveling because you're going to have to have a vaccine passport to even travel now, maybe even domestically. So that's going to kill the airline industry domestically and internationally. So you can imagine. So unless you have that vaccine passport, you're not going to be able to travel anyway, international or may not even domestically, because that's how it's going to go. So that's why I say this is going to be a deflationary spiral depression that you can see what's going to happen. And so this is the report for today. I just want to show you some things that is going on in this economy. I hope that you're still preparing and that everything is good for you and your family. Thank you for listening today. Have a great weekend. Try to get out and get some exercise and relax. And I'll see you later on this week to talk about some more real economic news. Thank you for listening. Have a great day.